today's first topic is the government loans that Rishi Sunak has been promoting on the telly, otherwise known as the bounce back loans or coronavirus business interruption loans. To give a brief overview, these have been promoted by Rishi as low interest loans that have no repayments or interest in the first 12 months, terms of up to 10 years, no personal guarantees required, and 80% backed by the government. Most businesses will have secured one by now, I would suggest. If they haven't, they've got until the end of November and to do so. And if they're struggling to do so and need some advice, they can come and speak to me. Now, I could go on and on about these loans all day long, but that's not the point of today. The point of today is to have a group discussion about the topic. And really, and more importantly, what I want to talk about is what business should be doing with the loans if they have got one, or in general terms, what in these challenging times, how they move their businesses forward. So I was going to open up to the group, and so who would like to go first?
Yeah, bounce back loans. Like you say, most businesses, more managed businesses especially, have taken their 50 grand loan from the bank. There is a danger there. I think the businesses look at it as a windfall and forget the fact that in 12 months' time or less than that now, they're going to have to start repaying these loans. The other concern I've got is that it may impact on their longer term plans when they look to raise further finance for expansion in, say, a year, 2 years' time. And you know, it's a short-term response to a critical problem, but you still can't afford to ignore the longer-term planning of your business. Yes, you've got a loan on board. Yes, you've got difficulties. Yes, there's a lot of uncertainty, but you've got to try and plan forward at least 12 months, I think, to get some scenario planning and go, okay, well, what if? And that'll be key to actually getting in a position where you are strong so you can manage your loan when it comes due. And it won't affect your business from, say, next April, May, June time.
Mm-hmm. Yeah, definitely. No, I totally agree with that. And I think, you know, there's some businesses have got the loans for different purposes and reasons. I think some absolutely needed it now to rescue their businesses because, you know, companies like in the events world, they've had no income whatsoever. So they've needed to use those funds straight away just to keep afloat. Whereas I would suggest there's a lot of businesses out there have taken a loan, potentially just parked it for a rainy day, which is also absolutely fine to do. And they may not need it. They may not need it in the future. They may decide actually to go and repay it early, and that's absolutely fine to do so as well. But I think there's an opportunity here for businesses to, you know, use the funds to maybe redirect their businesses and pivot and maybe focus on different areas because the world has changed or not. And I don't see us going back to normal tomorrow. I think, you know, we've made a bit of a steer towards a different direction. So business can use these funds to maybe, you know, point their business in the right direction. So they will need some planning and help and direction for that, won't they, Darren?
Yeah, I think that's a good point. I think, you know, it is people have had to rethink their businesses. And there is a variety of different uses that the loans have been put to. You know, there's the crisis management. We've got to pay the wages for a couple of months. Even with the coronavirus support on furlough, there's still a cash requirement for businesses which have a high fixed cost base to continue to trade. Going forward, again, you know, where will there be cash flow wise? Some businesses have used the extra funds to basically kickstart an element of the business that maybe they wouldn't have touched until later on in the year or next year. So basically use it as an investment into their business to actually invest back in assets or a new project. I've seen that. And then some have basically used it to rejig their existing finances. Maybe again looking at it as a pseudo equity investment in the short term to try and pay some of their debt down and get their interest costs down. Yeah,
no, definitely. I totally agree. Phil, what are your thoughts?
Yeah, my thoughts, just adding to what you both touched on there about planning for the next 12 months. Yeah, obviously cash is king at the moment, and the cash flow forecast really, really important, but that goes hand in hand also with your business plan as well. Whether that's in your head, whether it's a 50-page document or whether it's a one-page plan, you really need to sit down and reevaluate where you are now and where you'll be or where you want to be in the next 12 months. There's a lot of support out there. I'm working with a lot of businesses to help them reposition, see where they need to be in 12 months' time, and then putting the actions in place that help them get there.
Yeah, no, great. Neal?
Yeah, I suppose obviously with the prospect of a prolonged recession and possible further lockdowns, we've sort of been working closely with clients to help them sort of managing the money through coronavirus. And one of the resources we have at St James's Place is it's like a business owners advisory service. So there's a lot of resource within that we're supporting clients with through the partnerships. So yeah.
Okay, great. And Frazer,
Yes.
you know, potentially in 12 months' time, we could have some issues here, couldn't we? We could have companies that could be in problematic areas where they can't repay loans or they're struggling. And maybe that's where you can come in and help those businesses. What are your thoughts on that?
Well, you talk about 12 months. Absolutely. I think there's businesses now that are in that position. I think Darren touched upon it. There's people who've taken the bounce back and it's sat in a savings account, which is great. You've also got people who might have invested it in a bit of kit or something for the business, which is now not liquid cash, which can create problems in the future. And then you've got those that have used it for critical payments now. So if you're in that position, I think you really need to be speaking to someone in this group sooner rather than later, because 12 months down the line when those repayments are due is kind of too late. I would suggest that there are other options and appreciate, restructuring background. There's things like Phil with your government grants, has everybody claimed the grants that they are entitled to? Who knows? There's other options at the moment, like time to pay with HMRC, which they're doing. You may need somebody to negotiate that for you. You've got to look at your own stock and asset levels, i.e. what you've invested that bounce back in or what you've invested in, perhaps cash flow scenario. And then there's the other ongoing trading things, which are things like your trade creditor terms. These are all alternatives really to the close down, which everybody's keen to avoid, but ultimately look at your trade creditors or your trade creditor terms. And also look at whether the shareholders, if you've run down your bounce back loan, for example, I'd look at your shareholders. Can they invest some more funds to keep it afloat, to get through the period? Is there a future? Is there a cash flow that supports this business 12 months down the line when you are going to pay back your bounce back? And then I guess the other one that I've made a note of is trade debtors giving early payment discounts to get the cash back into your business. And those are all kind of restructuring or during restructuring and things that we can all discuss and perhaps advise on without needing a formal process. Yeah.
No, I totally agree. It's interesting as well because you mentioned on there about people using the bounce back loan as coronavirus business interruption loans to buy assets for the business. And I would always say straight away that's the wrong thing to do. I mean, it's purely dedicated to cash flow and help businesses ease that situation. Now, but we do know of plenty, and we've heard plenty of stories of businesses buying assets with them. And I think I understand that view because some people go, well, it's the cheapest money we're ever going to get. Let's use it. But the reality is it's not the best product for a business because you've just sunk loads of cash into a depreciating asset. I mean, there's not many assets a business can buy that appreciate in value. They generally depreciate. So I think if there's any businesses that have done that, then they need to think about, right, how can I get that money out of that asset and quickly? There's plenty of lenders out there, especially ones that we deal with, that can help you get those funds out of those assets. So we can look to refinance them. Maybe the banks out there will look upon that asset and say, well, it's 3 months old now. It's probably not worth what we thought it would be 3 months ago, but we'll take a view on it and we'll give you 90% of its value now. So then they've got that cash out and they can go and park that. So there is a solution to that problem, definitely.